Hey traders, hope you guys are all doing great. So I just want to show you guys a trade setup that I took yesterday that I made a bit of money on. And I just want to show you how simple trading can actually be and that you don't actually need to overcomplicate anything relating to your actual trading strategy. All you need to understand is how to set an alert on TradingView and how to mark off a level before you set that alert. So this was the trade that I took yesterday over here and just rode it up to about there, caught like a 1 to 2, and then I pulled out. So this was taken on the 15-minute time frame. So it looked something like this. Very simple trade setup. And let's go back to the 1 hour time frame. Now if we go look, so this is Ethereum. If we go look at Bitcoin, you'll see the exact same thing because these two cryptocurrency pairs are highly correlated. You see the exact same thing here happened on Bitcoin. As you can see over here, I've got an alert here set for this level over here. And it's the same thing on Ethereum. I've got an alert set over here and I'm just waiting for price to actually come and hit that level. Okay, I'll get a notification on my computer screen here and I'll also get a notification on my mobile phone. Okay, which will notify me, so I can just sit on my hands and basically wait. So if you want to mark off a level that you're interested in, all you have to do is come here and tap on the plus icon and add alert at your level. I've already done that, as I said, on Bitcoin. So I'm waiting for these levels based on this hourly structure to come. I'm waiting for price to come down here, and then once price comes down on to this level, I'm going to drop down to the 15-minute and I'm going to monitor price action for an entry. And this is basically all you have to do. You don't need complicated indicators or complicated liquidity, heat maps, and stochastics and RSIs and all these things, or things that give you a signal. All you have to do is basically mark off a level, have an alert, and then wait for price to come to that level. So what it is basically, as you can see over here, price pushes up. Now I don't know if you've ever noticed, but whenever you've caught the top or caught the bottom of a move, right? For example, if you went short over here, you were lucky enough to take this piece of this move and rode it down. And I don't know if you've noticed, because this used to happen to me hundreds of times, where I'd catch the top or catch the bottom, price would reverse and then bounce off a level, and I always used to wonder, why is price always reversing on me? I'm in profit, but then my stop's at break even, but now price is reversing on me and taking me out at break even. And this used to happen to me, as I said, hundreds and hundreds of times, and I actually started to use this as an entry strategy, because price cannot just drop straight down or go straight up. It has to hesitate. And this is what was happening to me. So as you can see, price will normally go up, for example, pull back, go up, then it'll come down and it'll bounce off a level looking left. Okay, so if we just remove that, you can see price will always bounce off a structure point looking left. It doesn't matter if it's the market is bearish or bullish, it will always bounce off structure looking left. So another example of that, let's just have a look. As it happens, I like to mark out these structure levels on the hourly time frame. I think I saw something good on the Nasdaq. So if we look over here, this market is bullish. So let's say you caught this move. Now all of a sudden price is coming back, and you're like, oh damn it, what's happening here? So we long from here. Price hits here and then basically taps you out at break even and then starts moving again. Now you can see price bounced off that the structure point over here. You can see this structure point over here. This is just a bullish example. So let's say you go into profit, you think, oh, we're away, the market's going, and price pulls back. Now price will never just, pull back and just completely reverse. It has to stall and hesitate. So when price hesitates and stalls at these old structure levels, I like to get in based on that structure. If we look over here, we can see the exact same thing. Price pushes up, all of a sudden hesitates and then drops. Now, if you were in profit here, you'd be crapping yourself because now price is pulling back. You might be long from here and you're wondering, why is price pulling back? Because look here. Look left. Price is basically bouncing directly off this structure point on the hourly. So if we just mark off the structure point, we go left. If we just do it like that, you'll see price is basically struggling to break the structure point over here. So I like to simply do things like this. I'll see price pushing up. For example, price is in a move. I won't try to catch this move. I'll just look for a hesitation point where price is going to reverse. So I would have seen price going up over here, and I would have set an alert at the structure point right over here. So I would have set an alert just like this. So I'll see, okay, cool, price will give me an alert. Okay, it might have just missed it in this case, but I will normally set that alert directly over there. Now I'll drop to a 15-minute time frame, and I'll look for rejections at this level. So you can see here we get a rejection. Look at this bearish pin bar over here. Just want to have your stop like that and just target the 1 to 2 or 1 to 3. Okay, so you have to understand price is always hesitating at levels. Price will never just trend or just go straight up or down. It has to hesitate. So you want to mark off these hourly levels. It's sort of like the same thing we get over here, exact same thing over here. See, price pushes up. We all think, oh, cool, we're away. But look over here. Look at this structure. So then I will mark off my level here at the structure point. Okay, and just as you can see, drop to a lower time frame. Now you can see over here, price comes to that structure point on the 15-minute. We get 2 rejections actually off this level. I would have probably gone for the first one, which would have been here. You can see the pin bar again, so you can see that absorption and that rejection. Alright, stop below that candle. Just targeting a 1 to 2. 1 to 1.5 or 1 to 2. So let's go back to the hourly. I'll show you another area that I saw. So if we look here, we can see here's a structure point here. You can see price comes up to it, rejects. Even if we drag it across, we can see price. If we use this as our structure point, you can see price pushes up and uses it now as a structure point over there. So your job as a trader is to basically open up the hourly chart every day on any pair that you like to trade and mark off a level where you think price is going to hesitate. Because remember, hesitation will equal movement. Hesitation is basically reaction, which will equal movement, which will basically equal money, profits. So basically, as I say, I'm waiting for price to come down to this level. Once it gets to this level, you can see this is a major structural point. Price is going to really battle to blast through this area. You can see price has already been struggling. If we even look at this, we drag this across over here, you can see, look at that, how price has struggled. There was even a trade based off this level earlier. Look here, this is a 15-minute trade over here. We get a bullish engulfing and price moves up for 1 to 1.5, 1 to 2 right over there. But I don't like to look at the 15-minute structure points. I like to actually find the major ones on the hourly time frame. You can even see it on the hourly, how price really struggled to break there. So for me, the next level of hesitation is going to be this level down here. So basically, I'm waiting for price to, let me just remove this. Basically, all I'm doing is I'm waiting for price to come down to this level. I'll drop down to 15 minutes, and if I see nice rejection off here, I'm gonna get in. Now, if you see major imbalance and stuff like that, you rather wait till that imbalance gets filled. As you can see, most of this imbalance will be filled by the time we get to the structure point. And then we just monitor price action for rejections on the 15 minutes, and then we get in. It's pretty much a bulletproof system. There's definitely going to be a reaction there. And the thing about it is that even if there is, you know, if you get stopped out, for example, these are areas where you'll always make money. Like even if you take a loss or two here and there, these are the areas that you'll quickly make those losses back, because you can quickly look, you know, the next day, mark off another level and make a little 1 to 1, 1 to 1.5 and make that loss back if it ever happens. But it's quite hard for you to take a loss at these areas, because price is always moving in waves and always rejecting structure. That's why price does move like this, because it's always bouncing off structure before it, you know, does anything else. So as I say, sit on your hands and wait for price to come to your level. Set a trading view alert. It's all free. You get 3 free trading view alerts on trading view if you're on the basic plan, on the free plan. And simply you just wait for price to come to those levels, wait for rejections, and then get in, you know, and just repeat the process over and over again. Maybe you have 3 or 4, 2 or 3 pairs on your watch list, 3 or 4 max, and just, you know, base it on the hourly time frame structure, and then drop down to your 15-minute or even your 5-minute and look for your entry. Target asymmetrical risk reward, and that's it. You know, basically all you need to do is you need to have a setup that's simple, repeatable, and scalable in size. So as you grow your account, as you get more consistent with the strategy, slowly start increasing your lot size. But the biggest thing is staying consistent with the strategy and not moving off to other strategies and other systems, because that's where you'll start taking losses and things will get complicated. When you start diversifying your strategies, all you need is a simple, repeatable, scalable trade setup that presents itself not all the time, but, you know, on a certain pair, it presents itself a couple of times a week or once a day type of thing. And then you just repeat that. So I hope this video gave you some good insight. If you're looking for a good broker, use the link down below and sign up with Vantage Markets with my link. Appreciate it, guys. Have a great week in the markets. Use the strategy, backtest it. Get good with identifying levels in the market where price is going to hesitate and move from. And then you'll easily start making some profits. Have a great one, guys. Have a great one. Cheers. Bye.